LiteFinance, the world of financial freedom.
Hello guys, it's Monday, July 11th, and so let's start the market forecast. This week's focus will be on inflation data from the US, but there are a couple more things to discuss, like for example rate decisions from New Zealand and Canada. But first, as usual, we will start with a macro calendar. And so on Monday, as usual, a slow start, and first major publications will come on Tuesday. And that would be German ZEW economic sentiment, which we can see doesn't look too good. It has been contracting since March, although gradually on a smaller scale each month. So we saw that the data from manufacturing are bad, unemployment rose significantly. Russia has blocked gas transfer via the Nord Stream pipeline due to technical maintenance, which we can assume has something to do with the tensions between Western countries and Russia. It poses a risk that it will not be brought back to function on July 21st as it is planned, which of course can cause even greater risk for German energy security. Although Germany right now is restarting and expanding their coal mines to offset the supply of gas and oil from Russia, it might not be enough to secure the energy sources before winter. This of course can cause further down pressure on German DAX index. The market opened almost with a gap, but it is currently starting to catch up. Right now the market is pricing the risk. Although it was public information for some time, and it may be that it is already in the price. Okay, going further with the calendar, we will get the OPEC monthly report, EIA short-term outlook, so some forecast for oil market and data about current production from OPEC countries which might influence the price heavily if we see some bigger deviations from what the objectives are. Still on Tuesday evening, we will have Bank of England Governor Bailey, which will hold a speech. And so during the night from Tuesday to Wednesday, which overall will be the most important day of the week, we will get the RBNZ rate decision, where consensus says that the rates will be hiked by 50 basis points up to 2.5%, which potentially can strengthen the Kiwi dollar. The GDP and manufacturing production data from the UK, and next the inflation data from Germany, monthly report from EIA, which will give us some information as for the current situation on the energy market globally, and then we will get the most important data of this week, which are of course CPI from the US. As for core CPI, which are data excluding food and energy, they are falling steadily. But as for CPI as a whole, the consensus says it will rise slightly by 10 basis points despite lower oil prices. It can make sense and can't at the same time, since the situation in the US is a bit different. On one hand, the oil price on global markets fell, but despite that, the price on gas stations didn't, because they have a problem with refineries which can't produce as much diesel and gasoline because they have operational problems. The companies lacked investments for many years, and on top of that, new government imposed various restrictions that prevent them from producing more ready-to-use fuels. So it doesn't matter how much the price will fall from the producers, the demand for fuel is so high they just can't refine such huge volumes. But on the other hand, the natural gas prices, which is also a huge energy source in the US, got a lot cheaper since the explosion in LNG port, because it meant that simply the supply they would otherwise export, they will consume at locally. So you could saw that the global price of natural gas went down, and for the EU gas it went up at the same time. It was because of this incident. And so as for the outcome itself, bigger changes and uncertainty will happen when we will get much higher readings from those which are forecasted. Right now, the markets expected another 50 basis point rate hike from the Fed. If the number will be close to the consensus, nothing major should happen. But if we get a much higher number, the situation could get spicy and Fed could opt for a bigger rate hike, which should automatically strengthen the dollar. Okay, and next we have the Bank of Canada interest rate decision, which is forecasted to be raised up to 2.25%, which means by 75 basis points. So the same situation here as for CAD, although it is a bit different because the market most likely already priced in this rate hike. We see clearly that Canadian dollar got stronger over the last 2 weeks. So I would rather expect that the price will be bouncing between two nearest support and resistance levels. What will be important is the comment after the decision and then assess if the next hikes will be announced. Still on Wednesday, we will get beige book from the US, and then on Thursday, labor data from Australia. Next during the day, initial jobless claims and inflation on producers' side from the US. On Friday, data on China on GDP and industrial production, and retail sales from the United States. And that will be all for today. We discussed a few things along the way, so I guess we could end here. So thank you for watching and wish you all a profitable week, and till next time.